And so we believe very, very firmly that anyone can be an entrepreneur.
If you just bought and held the top 10 stocks from today and you held them for 10 years, I guarantee you'd more than double your money in the 10 years.
Wow.
Hello, welcome to this week's Wealth Within School for Startups Radio Stock Market Update. My name is Jim Beach, and with me, as always, we have Australia's number one guy, Dale Gillham from wealthwithin.us. Dale, welcome. How you doing this week?
Oh, look, I'm fantastic, matey. It just seems there's always something going on in Australia. We've had fires, we've had storms, now we've got floods coming. Everything's happening at the moment here, so I might have to come and visit you and stay there for a while.
Well, it's just as crazy here. Last week we had tornadoes one day and snow the next day. I actually had an inch of snow at my house, which happens once every 3 years or so. So maybe these are the end of times, Dale.
Yeah, well, maybe Armageddon is coming. Jeez, but I think I'd rather be here where there's no snow. I think it's about 80, 85 today.
Well, we had fun in the snow, so our children enjoyed it. Let's talk about the market. What did you see last week?
Last week was quite interesting, wasn't it? I mean, everybody, including me, expected the market to fall away, but Monday the Dow and the S&P surprised us by trading up, and which was great to see. I mean, I still think the market's still got to find a high, and I'll talk about it and show the charts later on after we finish chatting. I'll bring up the Dow charts and give you exactly where I'm thinking it. But right now the market is defying a little bit of logic. Although, it did come back late in the week. I think Friday it dropped away a little bit, the Dow. So be interesting to see what happens this week. But there's a lot of good news in the US markets at the moment that will drive the price of your markets over the coming year. And I think I mentioned last week, my analysis is suggesting that both your markets, or your S&P and the Dow, will still run through to sort of 2023, maybe even a little bit longer than that. But right now it's bullish.
Well, I have an interesting theory. Last week on Monday night, we had the first caucus of the president of Iowa. It was a complete debacle. We still do not really know who the winner was 6 or 7 days later. And so that story eclipsed everything else in the news. We didn't talk about the coronavirus last week. We didn't talk about anything bad that happened in the news. The only thing we talked about was Iowa. And it seemed that everything else just sort of passed by in a haze of Iowa news coverage. And especially the coronavirus coverage almost disappeared. You can't really see it anymore. Is something like that possible? Is it possible that one predominant story is giving the market some cover?
Yeah, it is. I mean, obviously, it's the mainstream media do this all the time. And, with the business news, obviously, Iowa is an important state for the election. This is election year. And that's really where I feel sorry for you, mate. It really is. In Australia, they're allowed to do the election marketing, if you want to call it. They've got 6-7 weeks. That's it. We get it for 6-7 weeks. We're sick of it. It's gone. You get it pretty much 4 years in a row. It keeps rolling on, but you get it really heavily for 12 months. And obviously, with the impeachment of Trump all gone, and that's all settled down, what else are they going to have a look at? And obviously, the Iowa information, or what's going on with Iowa, is really important in terms of who might get elected. But right now, I'm thinking Trump's going to get elected again at this point in time. But I know there's lots of conjecture about whether he's done well or he's not done well, but at the end of the day, something will happen in October. But right now, it's you're just going to have to get used to boring television.
Well, thank goodness I don't live in a hotly contested state, because those states do get just nonstop political ads, and we're not getting that here in my state. Let's switch topics. A lot of interesting news last week. We had the job reports and a whole bunch of more earning reports from the fourth quarter. The job report was shocking here. 265,000 new jobs almost 100,000 more than they predicted. And then great earnings, too.
Yeah, it was absolutely. I mean, the jobless rate is near a 50-year low, and it's some sensational figures, I would think, from your point of view. And obviously, that's going to get better, obviously, with US-China trade deal phase 1 going through. I mean, China's said it's dropped the tariffs on the 14th of February, or next Friday. It will drop tariffs in half on a lot of things, which is like $75 billion of goods from memory. But that's all really great news. And in 2012, the jobless rate was at 9%, or unemployment was 9%. In 2014, it had gone down to 6.7. In 2016, 4 years later, it was down to 5. 2010 it was 4%, and currently it's around 3.6. So between now 2020 and 2012, it's gone from 9% to 3.6. It's more than half there. Now the lowest level ever was 1.2% in 1944, when everybody was at the Second World War. So you can understand why it was low. But the highest was 24.9% during the Great Depression. That was 1929. But the lowest post-war was 1953, which is 2.9. So it's just slightly above that at this point in time. But as at December last year, Alaska had the highest unemployment in the US at 6.1, so it's still a bit high, and you can probably understand that. But your state, Georgia, 3.2, so it's in line with the national average, and Vermont is at 2.3. But what I found was interesting on the jobless figures was productivity increased by an annualized 1.4%. That means companies are making more money, or will make more money if productivity is there. So that's really good after a little bit of a decline in the third quarter last year. I think it was down about 0.2%. But reporting season's still on us. It's looking really good.
And also really big increase in blue collar wages also in the last job report, which means that there'll be more money for the consumers. Us consumers, we're still spending. So any interesting reporting from the latest earnings reports? Any companies that stood out?
Yeah, I know we talked a bit about Uber last week, and how it's not making money, but it was up nearly 12% last week in price. After reporting, it actually been profit overall for the fourth quarter 2020 now. But the stock's been up. It's up nearly 59% since last October. But Uber's ride sharing, that's about 3/4 of its revenue and is profitable. So its ride sharing is profitable, but all other areas that Uber are in, such as Uber Eats, etc., they're not. I mean, obviously they're looking at driverless cars as well, so they're obviously spending money, but they're expecting all of those divisions to be in profit by the fourth quarter this year. So, maybe it's a stock we need to look at. But we also looked at Ford and GM. Remember, we talked about those last week, and Ford missed its earnings expectations. I was expecting a downward move on that, and it closed the week down 8%. Based on that. But in the 10 years since February 2010, Ford's down 27%. It's just done nothing in the last 10 years. And these motor vehicle manufacturers have got a lot of expenditure to retool to get to electric vehicles. Because I know in Europe, I think it's 20 years, they're going to be all electric. And I know there's a lot of other countries around the world moving that way to be all electric. And your Fords and your GM and everything have to really do that, whereas Tesla's set up to be electric. So it's already there. But Disney, that fell 6% on expectations that the coronavirus is going to hit its second quarter earnings, and it closed the week 2% higher, but it is still down 8% on its November highs. Surprisingly, GM, that was up. It's actually posted stronger than expected earnings, which surprised me a little bit. But there is manufacturing jobs going into the motor vehicle manufacturing area, but given the tariffs with China are coming down. So, but hopefully car sales do move up a bit more, and GM and Ford, because they're big employers, so hopefully that will help them. But it was up around 6% for the week before falling away to close just under 1%. And like Ford, the stock has gotten really nowhere in the last 10 years, so there might be some opportunity in that now. But Tesla, our favourite stock, that was so interesting last week. It was up 49% for the week before it announced the Model 3 rollout. It was going to be delayed due to the coronavirus in China, because it kept its factory closed after the Chinese New Year. And you can understand that in good corporate governance and corporate community saying, stay home, don't produce cars, we don't want you sick. And that's fantastic. But it closed the week up nearly 5%, which is not too bad. But anybody in Tesla now, I'd be planning my exit strategy with it anyway. I wouldn't be hanging on for too long, because anything that rises that far is going to start falling as people start taking profits.
All right. So finally, we have a buy on Tesla from you.
No, I'm actually saying sell, not necessarily, not sell yet.
Sell, of course, yes.
Yeah, hang on while it's rising, but get ready to sell, because that spectacular move, I mean, it's gone up so much over the last 6 to 8 months. You're going to start seeing a lot of profit takers on that, trying to protect their profit. So you'll start seeing it fall away. So I think it's probably going to go down maybe to $600. Could be even a bit lower than that. But there might be another buy in another 6 months' time. But right now, if you've got it, hang on to it. If you don't have it, don't buy it.
All right. What about the supply chain interruption at a larger level? So we just acknowledged Tesla closing their factory. What about iPhone production and all of the other factories that rely on Chinese manufacturing? What are we going to start seeing there, and could it hurt global GDP, American GDP?
It could if it goes on for too much longer, and that's the interesting thing. I know there's a lot of, Apple has a lot of supply chain protection around its supply chain, and so do a lot of other big manufacturing companies that are manufacturing in China. You know, things like or Sony would have it as well, and all the different types of phone manufacturers that have it as well. And they have a lot of stockpiles of their computers and their phones and everything else. So, but if it goes on for more than a few weeks, I think it's going to start. I mean, I think you're looking at, they would probably have a 30-day supply. And after that, I think it's going to start affecting that. And then obviously that's going to affect sales or delay sales coming through, and that will affect their bottom line. But things seem to be coming under control at the moment with the coronavirus, and I don't think the China government's got it under control, if that makes sense. And I think everything will be fine, but you never know. If it goes on for a bit much longer, we'll start affecting things.
Well, all that depends on whether we really trust the data coming from China. And that will be a topic for another discussion. Let's wrap up. We're about out of time. What do you see coming up for the week ahead?
This is an interesting one. I'm sort of 6 for one, half dozen for the other. It's if the market goes up on today or Monday, then I think we're going to move up for 2 to 4 weeks, probably 3 to 4 more likely to a new yearly high, or for the yearly high. But the other way too, I think if it does start to fall away on the Monday, then we're going to see a couple of weeks down for the low that I was expecting. So sitting on the fence, mate, and that's probably not a good place to be.
Dale, as always, I hope you're right, and we will see and hold you accountable. Thanks as always, and we'll look forward to talking to you next week. Have a happy Valentine's, and we will be back again next week with more from Wealth Within Dale Gillham. You can find him at wealthwithin.us. Dale, thanks a lot. We'll talk to you next week.
Thanks, Jim. You take care.
Please remember that this report is an educational tool. While Wealth Within holds an Australian financial services license, the information featured in this program is general in nature and therefore should not be relied upon. Before making any investment decisions, you should consult a licensed professional who can advise whether your investment decisions are appropriate for you. We hope that you enjoy this week's report.
Okay, so let's get into the US stock market and have a look at what the Dow Jones is doing. And interesting, last week everybody thought the market would fall away, and yet it's done the opposite and been quite bullish. And as I keep saying, reporting season can be one of quite a lot of volatility. We are in a period of increased volatility on the market anyway. We'll be for pretty much most of February, or at least till the third week of February, we'll still see a lot of volatility. But it is important in these times when the market is volatility, because we do reporting season 4 times a year, and is to be not reactive to the market. And that's probably the biggest mistake people make is to be reactive to the market rather than proactive about the market. And that means having rules and a process and a plan around what you're doing so you don't make knee-jerk reactions. But let's get stuck on to the chart of the Dow Jones and just see exactly what's going on and what I think might happen over the coming weeks and or months. So let's look at that. On the chart or on your screen at the moment, there's the weekly chart of the Dow Jones, and you can see here we've roughly just done a momentum line here. We've used a trend line tool. It's dashed, which means it's not necessarily following my trend line rules. I have 5 rules on trend lines. Most people have 1 or 2 at best. Most people just draw a line across peaks and troughs, which I think are CRAP trend lines. They're very ineffective or very, very hit and miss. Like most tools on the marketplace, I find most traders are using, or people using things like indicators like moving averages and MACDs and stochastics and Bollinger Bands, and I don't get into all of those because I find them a lot more hit and miss. But right now the Dow had a beautiful strong week last week. You see there's over 1,000-point range on the Dow last week, closing up high but pulled right off its high, so it'd be interesting to see what it does this week. I still think the Dow is bullish. I still think it's going to move up this year. It's not going to be as bullish as last year, neither is the S&P 500. It won't be up in that sort of 26 point range, or I doubt it will be, but right now it is searching for a high and it will come into a low. So if we do see a green bar this week, then expect 2, 3 more, maybe 4 more weeks up before the next downward move. If we see an inside or downward bar, for if it closing lower than that close there that we can see on this bar here, which is 29,102, if we start seeing it close lower than that, it will drop away, and it'll probably drop away for 3 to 4 weeks. That's the other side of that. But right now, don't panic. The Dow's looking good. The S&P's looking good. As we talked about with Jim a little bit earlier, employment's up or unemployment's down. Productivity is looking pretty good. Interest rates are low. So a lot of good things to be talking about with the US market at the moment, the US economy. So stay with it because you'll still make some really good money. But let's get into the questions for this week. Now we've got a question, well our first question today is from Christopher, who says, "Hi Dale, can you have a look at General Electric, Alibaba and Lockheed Martin?" Thanks. It's good. Thanks for sending in your questions, Christopher. Now, if you're watching this from the US or somewhere else in the world other than Australia, please tell me where you're from. Stick it down below. Make a comment saying, "Hey, Dale, thanks. I'm listening from or watching from Georgia or watching from LA," wherever you are. I know there's a lot of you who do watch the videos from the US and other parts of the world because you're interested in what the US market is. Love to hear where you're from, and if you've got a question, as I said, I'm really happy to answer it. But let's get in and having a look at a couple of the stocks here that Christopher's asked us about. General Electric's one of the oldest companies. I think it's one of the original founding stocks in the Dow. And it's one of the stocks I talk about in my book and actually trade in my book, Accelerate Your Wealth. So all the Dow stocks I traded in my book, Accelerate Your Wealth. So if you haven't got it, you can get on Amazon and get that version of it. It's the US version is I've used those 30 stocks in the Dow to trade for that 10-year period and get the phenomenal return we got. And I'm thinking if you didn't get 20+% return on your portfolio last year, there's something you're doing wrong, because the S&P was up over 25%, the Dow was over 22, I think, from memory, from that point of view. So if you didn't get at least 20% on your portfolio, you're doing something wrong. Maybe you need to buy my book and have a good read of it. Looking at General Electric, it's moving up right now. It's looking quite good. If I look at that monthly chart, you can see after huge falling away here, and which saw it get kicked out of the Dow. I think it was General Electric got kicked out of the Dow last year from memory, or early last year. It fell. You're looking from July 2016, but right now it is looking very, very good, and I think we're going to be seeing the bullish General Electric over the coming year or two. I think there's plenty of blue sky right through here, so looking a great stock at this point in time. So a really good pick, Christopher. Looking at Alibaba, interesting one there. I really struggle. I'm always cautious of Chinese stocks, and I'm not saying anything about Alibaba because I've bought stuff from them online, so I don't actually have a problem with that. I just have a problem with the reporting and everything for Chinese stocks. You need to be really careful about that. I know there's some documentaries on that. You might find them on YouTube about the big end of town and how the Chinese companies actually report in China, and there's a lot of issues there, but Alibaba is one of the better ones, and right now it does look good, but just be careful, as I said, if you don't keep looking at different Chinese stocks, it's harder to get proper information out of here in the Western world, so to speak, that is not necessarily manipulated by the Chinese companies themselves to make them look good. But Alibaba does look very, very nice at this point in time. I think it's going to continue to go up. How far it is, I'm not sure, but right now it does look good, so stay with that. Let's now move on to Lockheed Martin, which was the third one that you had here for Christopher, and you're great at picking stocks that are moving up. Lockheed Martin is looking very, very good right now. It's beautiful looking stock. It trends super well. Look at that. If you had this is one of those stocks you pretty much almost buy and hold, although you can see a period from sort of, what's that, in 2008 right through here to around about 2013, a big sideways move. That sort of Coca-Cola did that actually as well. But you can see a beautiful trending stock here at this point in time. If you own this stock, I'd just stay with it, stick a stop loss underneath it, and not worry about things because it does look very nice. It will continue to trade up. The last one I wanted to look at today was Tesla, because it's been in the news quite a lot. Last week, this stock took off like a rocket, and I know Jim and I talk about Tesla all of the time. He was talking about shorting it last year, and I'm saying, why would you short a stock that's bullish? And this is really the thing is, people don't realize, they look at the fundamentals and they think, oh, it's having troubles here, having troubles there. But people obviously like Tesla. They've pushed the price up. If I go in and look at my little, where's my little tool? And it's not even there. Where's my tool? I'll get into here. Tell me I can't find it now. Not that one, not that one. Might be that one. There it is. Looking at this from the prior week's close, at one stage last week it was up over 48%. It closed the week up 14.99%. That's really volatile, which means the market doesn't really understand what Tesla's doing right now. Obviously, it came back quite heavily later in the week. If I go to a daily chart, you'll see why it came back very heavily later in the week, basically saying we're delaying the Model 3 rollout, obviously with the China factory not opening up after Chinese New Year simply because of the coronavirus, and that's understandable, trying to protect the workers. Stay at home, stay healthy, don't push out cars, and that's really why that's dropped away. It will have a bit of an impact on the profitability of Tesla, but how much? We don't know that. That's a pure speculation. This is where the market really does move stocks around, but if you own Tesla right now, I'd stay with it. I would expect it to fall back down into this sort of 600 point range. That's a phenomenal move through here. If you're looking at this move just from those few months here, there's 300 and something percent. So what you're going to see is a lot of people starting to take profits because that has been a phenomenal move, and that will start pushing the price down. And then the more, it's like a snowball, the more people sell, the more it's going to keep falling, and that was what will happen. So would I be buying Tesla now? No, not a hope in hell. I'd be looking to exit if I did own it. But thanks for sending in your questions, and thanks for watching till the end of this video. I really do appreciate you doing that. Remember, wherever you are in the world, just put it down below in the comment section. Hey Dale, I'm watching from Copenhagen or Russia or wherever you're from. Please stick it down there. And again, if you have any questions on the market, let me know. And if you'd like me to answer them, just stick them below and I'll get answering them. So you get your fingers on the keyboard and start typing the questions. Now remember, I do these reports every single week, so hit the subscribe button now and click the bell on the right of it so you know when we go live with our latest stock market reports. But for now, I'm Dow Gillham, the Chief Analyst here at Wealth Within. Goodbye, good luck and good trading.